All right, guys. So in this video, we are going to be talking about the wedge pattern. Now, the wedge pattern can take on either the bullish form or the bearish form. And more specifically, the wedge pattern is a reversal type of consolidation pattern. So what does a wedge pattern look like? Well, if I go ahead and take some trend lines to this consolidation period right here, you'll notice that we have two trend lines that are pointing into the upward direction and are converging with each other, meaning that they are becoming closer and closer together. This would be called a rising wedge pattern, and a rising wedge pattern is a bearish reversal pattern, meaning that we're expecting a reversal to the downside to occur. Now, a wedge pattern, since it is a reversal pattern, we want to see it confirmed by bearish divergence. This rising wedge pattern right here, if I go ahead and look at the RSI, we have a high that corresponds with this high, a lower high that corresponds with this higher high, and this lower high that corresponds with this higher high over here. So this would be a rising wedge pattern, and we are looking to make a reversal type play on it. And how you're going to want to go ahead and look for the entry is by using your Fibonacci retracement tool, this time going from the relative low to the relative high of the pattern. And where you're setting your entry point is with a candlestick close beneath the 0.707 level. When you get a candlestick close beneath the 0.707 level, you are going to set a stop loss at the pattern high, and your take profits are at the 1.414 and 1.618 level. Notice here, we did get that candlestick close beneath the 0.707 level, and it did actually pull back a little before breaking through, but we are going to be respecting our stop loss at the pattern high, and you would actually stay in the position. And notice we do see a nice move to the 1.414, and for a short while, it did touch at the 1.618 level. So that essentially is the rising wedge pattern. And let's go ahead and take a look at more examples. If we go ahead and take a look here, and I draw some trend lines to capture this consolidation period that is happening right here, you'll notice that we have an upper trend line and a lower trend line that are converging and pointing into the upward direction. This, of course, would be a rising wedge pattern. And if we look at the RSI matching the highs here and here with these highs, we will notice that we do have bearish divergence occurring, which is a confirmation of the pattern. So now we can go ahead and look to establish our entry by using the Fibonacci retracement tool, going from the relative low to the relative high of the pattern and looking for that candlestick close beneath the 0.707 level. Here we did get that candlestick close beneath the 0.707 level. Go ahead and take an entry to the downside, whether that be shorting the stock or buying puts if you're playing the option derivatives. And where your stop loss is going to be is at the pattern high, and take profit at the 1.414 and 1.618 levels of retracement. Notice you would take that entry here, set the stop loss at the pattern high, and you would end up taking profit on this position as we do get a nice reversal to the downside where the 1.414 and 1.618 levels were both reached. Let's go ahead and take a look at another example of a rising wedge pattern. Notice this consolidation period right here. If I go ahead and draw out this upper trend line, we'll see that it is pointing into the up direction. And the lower trend line as well is going to be converging and pointing into the upward direction, just like the trend level of resistance that we drew right here. Now, what do we want to see on the RSI is, of course, going to be divergence. We do get that divergence here where we have a high and a lower high that correspond with a high and higher high in price. So how we can look to go ahead and establish an entry here is by using the Fibonacci retracement tool, going from relative low to relative high of the pattern. And the entry point is going to be with a candlestick close beneath the 0.707 level and price targets at the 1.414 and 1.618 levels of retracement, all while setting that stop loss above the pattern high. Notice we get that candlestick close here. Go ahead and take an entry to the downside and take profit at the 1.414 and 1.618. You would not have gotten stopped out of this position. And once again, guys, just make sure that whenever you are looking at a rising wedge pattern, that it is confirmed by that bearish divergence to let you know that a reversal is very likely to happen. So the counterpart of the rising wedge pattern is, of course, going to be the falling wedge pattern. And the falling wedge pattern is just the flipped inverse version of the rising wedge, where if you go ahead and draw some trend lines, notice if I go ahead and draw these trend lines right here of this consolidation period, we have two converging trend lines that are pointing into the downward direction, creating that wedge-like shape. Now, this time on the RSI, you want to see bullish divergence occurring. Notice we do get that low here, and then a lower low over here in price, while we're seeing a low on the RSI and a higher low on the second low point that corresponds with this lower low over here. This, of course, would be bullish divergence. And when you are seeing bullish divergence on the RSI, then that is confirmation that we're likely to see a reversal. And how you're going to want to go ahead and take an entry is the same way that we did earlier, by going from the relative high to the relative low of the pattern. And we're looking for an entry when we get a candlestick close above the 0.707 level, where you would then set a stop loss below the pattern low, and you are looking to take profit at the 1.414 and 1.618 level, as we're seeing that was reached quite nicely over here and over here. So this is the falling wedge pattern, a reversal to the upside. It is a pattern that generally leads to a reversal to the upside, and you are looking to confirm it with that bullish divergence. Of course, take the entry at the 0.707 level when you get a candlestick close above that level, and then take profit at the 1.414 and 1.618, all while setting a stop loss beneath the 0 level or the pattern low. Let's look at one more example of this here. If I go ahead and just draw out some trend lines that go ahead and actually capture this move right here, you'll notice that once again, we have two trend lines that are converging and pointing into the downward direction. This would, of course, be a falling wedge pattern where we're looking for a reversal to the upside to occur. What we want to see on the RSI is that bullish divergence. Notice we do get that here, where we have a low and then a higher low that corresponds with the lower lows in price. Once you guys see that occur, then you can go ahead and look to take an entry by using your Fibonacci retracement tool. Go from the high of the pattern to the low of the pattern, and where you're looking for that entry point is with the candlestick close above the 0.707 level. When you get that candlestick close above the 0.707 level, take an entry to the upside, and you're looking to set your stop loss at the pattern low and take profit at the 1.414 and 1.618 levels of retracement. This, of course, is a falling wedge pattern, and it does typically lead to a reversal to the upside, especially when it is confirmed by that bullish divergence. As you can see from these examples, rising and falling wedge patterns are pretty strong reversal patterns, and you just simply use your Fibonacci retracement tool to understand where to enter and where to exit along the play. Thank you for watching, and stay tuned for more patterns.